I'm Darius McDermott, Managing Director of Chelsea Financial Services. Today I'm with Will Lam, Lead Manager of the Invesco Asian Fund. Will, hi. Value's been out of favour in the market broadly, and you have a value-oriented style of investing. Has that been the case in Asia as well over the last number of years?
Yeah, well, I think it's fair to say that value's underperformed in Asia just like it has in the rest of the world. But you have to sort of distinguish between different types of value investing.
Yeah.
And if you were to sort of measure the index by the cheapest stocks and just follow how they've done, they would have underperformed the market. But that's not exactly what I do as a value investor. I try to compare what I think a stock is worth to the market price. And if the market price is significantly below what I think it's worth, then I'll buy. And that style, for me, has worked in the last few years in Asia. You
mentioned, when we talk about sort of process, you've touched on valuation, but you like good businesses as well. What's sort of a good business, and what does that mean to you?
Yeah, my emphasis is on valuation. The ideal investment is a good business trading at a cheap price.
Yeah.
But good businesses, if they're trading on an expensive price, are not interesting to me. So it's all about this comparison between what I think a fair price is and what the market price is. So whether it's a good business, yes, ideally it would be. But if it's a bad business trading on really cheap multiple, then I find those attractive too.
So still sort of cheap companies and good businesses as well, but it's about that right price and the work you do before you buy a stock.
Yeah. I mean, ultimately, the best investments that we've made have been good businesses trading at cheap prices. But we've also made good investments trading, good investments in relatively poor companies trading at cheap prices.
And I suppose this sort of from a macro perspective, the overhanging macro feature of the last certainly 6 months, but it may be even 12 months and going forward, is the tensions on trade wars between US and China. Has that affected the region, or do you think that's really yet to play out?
Well, it's one of these occasions when the market is uncertain about what's coming up, and uncertainty is always a bit of a killer for the stock market. And but this is the sort of thing that we feed on. We're contrarian investors, and every time there's an issue like this, we tend to buy into it, typically speaking. And that's no different this time. We think, yes, there's going to be economic weakness as a result of delayed decision making in Asia. People who are sort of building factories in China will not know whether to go ahead, given they don't know what the tariff situation is. So there's this delay across the board, and that is relevant to China, but relevant to Taiwan and Korea as well. So in those three countries, we're finding that the market's been excessively punished for this uncertainty.
And with that uncertainty and volatility, as you say, as a stock picker, it must throw up some opportunities. Where are you currently finding sort of your best opportunities and ideas?
So right at the sort of the crux of the trade problems would be sort of the China auto sector. So we've been finding ideas there. Also in the Taiwanese tech sector, we've been finding new ideas there too. And we continue to find ideas in Korea, which is extremely cheap, right at the bottom of its valuation range.
Will, thank you very much.
Thank you.
For more information on the Invesco Asian Fund, please visit chelseafs.co.uk.